What is going on there, boys and girls? So, we're going to be going over a nice little trade review for the day. I would want you guys to be able to watch this whole entire video. Don't skim through it like a lazy person because there's a lot of really nice examples in here. I want to share the context of the market, kind of how I've been really trading for myself lately because there hasn't been a ton of setups, right? And we did have Nvidia earnings today. Today's Thursday, right? So we were kind of waiting all week on that Nvidia report. The Nvidia report comes out. Do I care about numbers? No, I don't. I trade the charts, right? So let's dive into these charts and talk about some of these trades that I took, right? So we had the Nvidia report, like I said, on today, which is Thursday, and I was in PANW on this little pullback into this little bull gap from the previous before the earnings report itself, right? So we had this massive daily level retest, right? So this was a massive daily level that was sitting right over here. We actually retested that into Tuesday, which was a nice little gap down, and then a nice little recovery off of Tuesday. Okay, so if you go over to Tuesday's action, it's right over here. Tuesday, I was actually long PANW, and then the next following morning, I opened this up and it was up 70%. I never scaled, and then I ended up having to stop out, break even. I re-entered on a lower high. I'm sorry, a higher low, and that higher low was kind of coming right off of the previous low that had a failure behind it, right? We filled the gap all the way down here. Here's the gap. So here's the daily level retest. So I'll make this purple because that's what I do with my higher time frame levels. And then this is the earnings candle itself. Once I started to see we sold, we held the previous higher low, and then we got back above the earnings candle. That's whenever I was like, okay, we got back above the earnings candle low. We came back down, we retested it, and then we had like a relatively strong close. And this was just a flat trade kind of this whole entire day, right? So I was actually green a lot up here, but my target for the whole entire trade was if you go to Tuesday's action, you take a look at it. It was a really nice strong move right off the open. And what I did was I took this right around here. So I had something like a stop loss, something like this on the overnight gap. Entry was probably right around the opening, the closing print of the previous day. And then what I was doing was targeting up into these highs up here, right? So I probably had, let's just call it like a dollar 50, a dollar $2 of risk with a whole entire target reaching all the way up into like $7 of reward, right? So this is about a 4R trade that was established over here. However, I did not ever get that, right? And this was just the first initial target, right? I wasn't really looking for a lot of volatility within the tech market just because, we have an NVIDIA report. This is a tech name itself, and we also had a CRWD report, which is also the PANW's brother, right? This is a cyber name. You go over to CRWD, same exact thing. They had a report today as well, right here. So, no, that's not it. This is it. Alrighty, so I want to go over these two charts because one, they were both on the plan. Two, PANW was a trade that, like I said, I had to cut into this right here because we had a CRWD report on the way, so I didn't want to get smoked by anything, and I was expecting this to kind of recover and get all the way up into 355 on this given day. Unfortunately, we never got that, so I didn't get the full intraday trade there. What it more or less did was kind of just get the recovery, close up towards the highs, and then that's whenever I sold the resistance. I took like a 35% win on this day. So yeah, nothing too crazy there. That's the PANW trade, and then today I was like, okay, I still want to take a PANW trade. It's just I don't know exactly how this thing's going to open the next following day. I don't know if it's going to get absolutely smoked from the CRWD. I don't know if it's going to do anything like that, right? But whenever we're taking a look at PANW, we're finding how CRWD, first of all, this was the trade today. So CRWD happened way too fast for me to get any sort of like alert out for anybody. But I did pick up some next week calls as well as some weekly flush trade. And the weekly flush trade went and popped immediately right after this first 5 minute candle. So I sold it immediately. That was a several 100% return. And then whenever you're looking at this was a really nice trade, right? You go into like the 1 minute just so I can break down the smaller time frames here. I There's a really nice bid opportunity to really be entering right at 932. This is 932. The next level that we have directly above us is going to be somewhere into this gap, right? So what I do is I mark out the gap, okay? And what we actually did was swipe right into that gap and then reject 285, and that was our established high of day, right? Um, but the reason as to why I really also like this one was we had an earnings report. We were flat. We opened up minus 0.7%, right? I don't even know what the implied move was, but I just know the contracts are going to get crushed. So whenever you're looking at this thing and the call options, what we do is we gap down from the previous day to the new day, 0.85%. The call options got crushed by like 70%. So whenever you're picking up calls within this general crush, and then the stock kind of makes that really nice move in the first 5 minutes of the day, all the way back up into 285 within like 15 minutes, 20 minutes, 30 minutes, whatever it was, then you're going to get a really nice return even with a little bit of time there, right? So the analysis that I did have behind this one was whenever you go to the daily or the hourly, anything like that. First of all, the sentiment around this name is just really, really, really bearish. Okay, so we did take out this previous support, and what we did was we kind of bled beneath it. This was the breakdown level, I should say, right over here. What we did was we bled beneath it. We never got any really true strong retest. And then what happened here was it just kept bleeding and bleeding and bleeding to the point where the whole market gapped down on August 5th. This didn't gap down as bad as some of the other names, right? And then it actually recovered and closed green on the day. So I noticed there was some relative strength that was happening here for a very short amount of time, right? Because these are all very high volume sells. But guys, I mean, the highest volume sell after this was one that we claimed, right? This was the gap. Here was the second. Here was the relative to the rest of the chart and the range that we're within. This is the highest volume sell, and we're sitting right above that gap into the report, right? You go into the hourly, that would be the gap. You go turn on the extended. And as you guys can see, what the report kind of did was just dig us down into this progression area, and then we opened right above it. Okay, so it's just simple gap. It's just a simple range of territory where buyers are going to bid this thing back above. It's going to retest in a very like heavier liquid ranges. Along with the IV crush, this makes up for a really, really, really nice trade. Your risk can kind of be established if you're buying these right off the open. Your risk can be established right off of the opening print, right off of this low. Okay, so whenever you're looking at this from like a risk to reward perspective, guys, it's a long side trade, and even if you caught it a little bit late, you're looking at like probably about $5 of downside potential, with a target all the way up into like 280. I mean, that's a 3R trade, even if you're not catching this right off the open. If you go into this, you don't necessarily have to risk the opening print. What you could do is put on your extended, take a look at kind of where the upper ranges are of the report, or if you want to, you can take off extended, look at the previous day high, right? So this was just a simple previous day high, right? This was the opening range of the previous day, and then you go into the one, and you'll kind of see how it pivoted right off of this, right off of the open, right? So that's exactly where I was like, okay, there's a lot of relative strength here. This is like flying right off the open. If this starts rejecting this and getting back beneath that previous day, I'm probably going to cut it relatively quick. Although I do think this has a lot of potential to get up towards like the 285 mark. So just call it about, we'll just call this about $4 of risk, right? If you want to, you can call it $3 of risk. You're looking at about a 4R trade, right? Really, really nice chart. Then you go over into PANW. Didn't have the craziest of the craziest volatility off the open, but it was still really, really nice. I've been bullish on this chart for so long, guys. So fucking long. Okay, we get the opening print. All right, we gap up a little bit, and then we explode right off of that. I even said right over here, guys. Let me show the Discord real quick. Um, so I said I would still like to trade the PANW. Didn't get the win I wanted to from yesterday into today's position. Only ran about 70% at highs, which is $1.50 off the target. So this is still going to remain a focus for me as long as no gap down happens and this shows relative strength like it has been. Right, so very simple type of thing. Next thing you know, I'm also in PANW. Can't really get everything out that I wanted to talk about right off the open. I shared this in the pre-market scan as well. That was at 9:33 in the morning. You come over here at 9:33 in the morning, nice rip, breakout right above the level. 9:33 would kind of be the breakaway, the continuation, just simply risking the 355 spot, right? So when you're looking at this from risk to reward, you can either buy a little bit more time and risk the opening print. If you don't really want to, you can kind of just risk the level itself. Um, I got them off of like this range right here, and then obviously a target all the way up into like what I would say would be the gap range from all the way over here. This massive bear gap makes a lot of sense, which is also kind of like the same general spot as like this resistance from over here. So that's what would be your realistic target. Call it like right beneath, and you're looking at basically a 5R trade. Really, really nice trade. Even if you want to move it down to the opening print or the orb low, it's a 3R trade. Um, and that's being lenient, right? I mean, you could start to see the opportunity to be able to scale this thing and realize some profit. But from you're just looking at like a trade basically from 355 all the way up into 366, $11 move, 3 to 4R trade, 3R minimum, depending on how you manage your risk and how you buy your time, right? But a 3R trade is nothing we could really get down on ourselves about, right? Clean little range break. I actually took this a little bit earlier, but like I said, I can't get everything possible. Like I can't possibly type everything and manage everything and get all my orders in within the first minute of the day. I just can't really do that. So my risk to reward was probably looking more like something like this, guys. As soon as it kind of got above that level and then got the closure, I was definitely getting in on this wick right here. Okay. And then I was probably also entering a little bit over here, but I couldn't catch any nice bid fill with size up until this wick, right? So I caught a little bit more size, already had some size to it, partially got filled in the opening volatility, and then boom, right? So it's the same trade essentially, guys, as yesterday. Um, it's the same trade as yesterday. I just didn't want to hold through that whole report. Once I saw the reaction to that report, once I saw price kind of not move and where it retested from the report, I'm like, okay, yeah, this is probably going to get a relief to the heavier liquid candles above us that are going to have more supply within them, right? Breakaway gaps lead to a bullish setup. This is an example of a reversion type of trade, which I do need to talk about examples within the Discord, but this is just simple reversion here, guys, right? It's tight consolidation above what we would call claimed progression from buyers, and then the report is a liquidity driving type of event, right? Same thing that I did with McDonald's a few weeks ago. I noticed how, okay, this was looking like some sort of accumulation. We swept out a previous swing low, and this thing has kind of been building out like a nice little base here for multiple weeks on end. Next following day, what happens is the report's flat, sweeps the previous day low, and then pushes right back above it on really nice volume. It's going up to the resistance, right? So whenever you see no direction, whenever you see nice momentum right off the open, could just simply look something like this, right? Risk the previous day low, target the high. You're looking at like a 5R trade, path of least resistance above you on the fourth test of this resistance. Now you can start looking at the resistances far, far, far above you. You're looking at a 9R trade based off of a earnings report that is driving liquidity. It's bringing volatility for a premium that doesn't necessarily need a ton of volatility. So those returns can really become more outsized and really nice risk to reward if you're able to catch really nice volatility and direction on names like this, right? Because PANW is kind of the similar way there, guys. So my trade from yesterday into today would unfortunately ran about 350%. Would have been a really massive day for me, but instead I kind of just de-risked the trade, got through the report from CRWD as well as NVIDIA. The next following day just took the simple breakout on like a 4R, and yeah, it was like 100 and something percent trade. So um, those were both shared in the Discord. I did show them in the pre-market plan as well. So yeah, that would be that. Let's go over into some other trades. I want to talk about Roku. Roku, I took a little bit on a worse fill, so I didn't really want to share this one, but it was a nice trade. I was been looking for an entry on this the whole time because this retest yesterday really did catch my eye. And whenever I saw growth kind of moving this morning, that's whenever I was like, okay, yeah, this makes a lot of sense. I really like this. There's a nice gap up within ARKK. Whenever you go to the ARKK daily, it's not the prettiest spot in the world on the chart, but yet again, we were getting a gap up, right? So I was looking for the relative strength within Roku, and here would be Roku. Really nice chart. Really nice resistance break into a retest yesterday. And then we didn't really get any sort of outsized gap up, right? So I was definitely watching this thing off of the open, off of like retests, off of like pullbacks. And then whenever you're looking at just the simple intraday swing low, swing high, it ever so slightly tested into EQ. If you go into the pre-market session, what happened here was, or if you go into like the hourly, yeah, so this was just a simple kind of higher low for the given day. And then what I did was grab some, and then I saw the tape kind of getting lit up over here. So I grabbed some calls and then I just took them up into there, into the top of the bear gap. That wasn't a serious trade by any means. I actually did miss this off the open because I was looking at some other things. So that was a little unfortunate. But yeah, so those were the trades for today. CRWD was one that was on focus. I just really couldn't have any time to trade this one. It was a IV flush opportunity. Here would be the Discord on this one. Like I said, every single trade is typically planned. This is CRM Daily, IV Flush Candidate. We had a report today. This reported today, and it's up to 271.62, which is the gap in after hours trading today. Implied move was 6.5%. So I'm excited to see if the premiums can get noticeably crushed into tomorrow's trading session. Line in the sand would be the gap level towards 272, right? So this is the gap level, 271.62, right? So the 272 range is a psych level to be respected into like, a 40-cent buffer beneath that range, 38-cent buffer beneath that range at 271.62 is kind of the range where I'm really looking for this to like be a trade at. So this is the 272 level, right? So right around here. Um, as you guys can see, the high of day here today was 271.95, right? You go into your 5, you take a look at this thing, you go and do the extended, and then you see a pre-market high up here. You see it opening actually beneath the gap, right? So this is a simple trade where it's like, okay, this is right off of a bear gap. This is an underperforming tech name. It's getting the breakout. If it gets the breakout and then starts failing, the failed, quote unquote, failed breakout is going to be if it gets beneath 266, right? So we're going to need a $5 move to either de-risk the trade or look for the trade to start, look for the name to start failing this previous resistance turning a support essentially. That's exactly what it did. And what it did was kind of just stay pinned down here the whole following rest of the day, right? So whenever you're looking at something where you're not really seeing any sort of buyer and you're more or less just seeing straight up capitulation at 9:36 in the morning right through the level on really nice volume, that really goes to show you what they're really trying to do there. Oftentimes what you will see, guys, is sometimes a name where, okay, maybe they like the report but they don't really want to hold on, and they're satisfied with their gain. The name will mark up, they'll sell it off and they'll take their gain, right? Vice versa, a name will mark down, they'll mark it down and then accumulate because they like the price in which they marked it down to, right? So that's why I always like to talk about how earnings reports are liquidity driving events, right? That means there's going to be a lot at play from both parties. So there is volatility on the table for us to take opportunity on, right? So that was a really nice trade. I'm actually going to take a look at those premiums real quick on that, maybe like a 2 or 3 week out expiration. Guys, whenever I talk about like an IV flush, if the premiums don't get crushed right off the open, and they're not severely crushed, it's not the biggest deal in the world, right? If it's going to bring volatility, it's going to bring a really nice trade set up on really nice risk to reward, by all means, take it. This let's take a look at like the 250 put for today. The spreads aren't the greatest on CRM, unfortunately. Okay, so actually, yeah, the contracts did get crushed. Okay, so um, these did. Well, no, I mean, I guess we did gap up, so that, yeah. They didn't get crushed substantially, crushed, but I mean, they kind of did. So what happened here, guys, was we opened today. Is today the 29th? Yeah. So we opened today with these kind of opening up towards like 216, and then they flushed all the way down into 94. Okay, so if you're able to catch the 94 fill, that's right up here, which this doesn't really make any sense. I feel like my premium chart's a little bit off here. Let's go to a next week expiration on this. All right, we'll take a look at like the wait, what is this? 271? We'll take a look at the 265 put. Alrighty, so these opened up at 282 today, and then they saw a really nice recorrection after 940. So at the bottom of this candle, I'm sorry, the bottom of this candle, these recorrected themselves all the way up into 945 being right down here. I think Weeble's different a little bit. Okay, so right around here, these went from 300 to 800. Okay, so say you're risking $82 a contract and you're looking to make however much these ran all the way to 800. Even call it $100 a contract, right? This is why you don't really want your risk to be super numerical here. Risk the pre-market high, fills right off the open. If you want to, you could risk the right above the opening print. Targets back down into here beneath into the bottom of the range on the daily chart. Like guys, you're looking at like a 6 or 7R, right? So these trades are very vulnerable. It's just you got to have the patience, you got to have the balls, and then you have to have the very established risk and rules so you don't get absolutely smoked, right? You only have to buy one contract here to make your day, right? $600 a day potentially here with just simply trading CRM short side. Um, so those were all the trades off of the open. Now, whenever we get over into the other ones, they're a little bit different. Um, they're a little bit different, but they're nice. So one thing that I like to emphasize all the time is that distribution typically happens within pockets where there's gaps established at, right? That's just simply how it rolls. So whenever you're looking at this thing, guys, and typically what likes to happen is, okay, if you feel like you're flagging out and then that flag starts failing previous day highs and previous swing highs, previous high of days that are established within trading days, we have one here, we have one here, right? And it's all within this bear gap that was established all the way back from whenever we previously recorrected down here into like the May territory. Okay, so we're getting the relief, we're getting these gap ups, right? And then what we do is we start finding these ugly looking candles followed by inside bars with, you know, gross sequences afterwards, right? Within these bear gaps. You go over to SPY, same general concept, except it's up towards that all-time high. Since this name is more supported with like the financial sector and healthcare and industrials and stuff like that, right? So whenever you're looking at this kind of stuff, you can start concluding to yourself, okay, what's going on here? Are they kind of trying to like distribute this over time and weed out some buyers that are stepping in on these dips that think that this thing is going to flag out and move its way higher? Well, whenever you go into the 15 and you start seeing how the previous day highs, we have two relative equal highs right over here. Here's a previous day high, here's a resistance and a high of day for Tuesday, right? We consolidated it, we pushed ever so slightly above, and then we just sat beneath it and consolidated off of it for quite some time, right? This was actually a gap up followed by what looked to be like some sort of buy climax that started to kind of start its campaign off of like the 10 o'clock range. And then the volumes just started to really, really, really dry up. So you have to think about effort versus result here, fuel, everything like that, right? If we can't get above this level, this range, what's going to happen is that they're going to distribute this to the point where there's not going to be enough of a buyer here. It's going to get beneath the progression level here at 475.55. If you go to like the hourly, the daily, anything like that, right? That's the level kind of there to be held. And it didn't do any of that, right? It kind of just sat there, didn't really do anything, and then we got a knife beneath, volume started to ramp. I was like, okay, yeah, this is probably going to reverse, right? So I took some short side vehicles that I still actually own, but execution and risk was off of, here was actually the top of the gap, right? But I took the wick. So I took the wick, which was kind of where we were started to chop from, and then I was like, okay, I'm going to plan a short on Apple. I talked about this actually before I actually took the trade. So when we're looking at this, alrighty, so okay, the Apple tape is definitely getting hit here with something. I want to see a knife beneath the gap low here at 231.50. So this was the level that I had as my execution and risk, just to have really tight risk parameters because I was up with PANW, I was green with the other one, CRWD, and then I had a small little Roku position that was nice too. Those are what I want to protect my day with, right? So whenever I'm looking at some trades that I want to be taking, they all should be a 3R trade. They should all be relatively tight risk and no crazy expectations of anything happening. And then what I ultimately wanted was like the opening print of the day. So I started to notice this was basing the gap, and then we started to get this like nasty rejection looking candle on really heavy volume. Um, And this is also leading into like the afternoon, right? So whenever I saw this, I was like, okay, I think they're trying to press this beneath. And then I saw a 60K lot enter in the bid. He got absolutely ate. And then they just kept trying to refresh it right off this gap level. And it just didn't work. It just didn't work to the point where they were just done. And then that's whenever we started to get the knife in the overall market. Apple unfortunately didn't dump enough there, but it ran about 60%, so it was a really nice trade. Was probably risking 20%, not the biggest, not really too much of a big deal. And then I still have some there. I still have half exposure there. And then I also had Netflix. So this was the level in which I was looking at. It's a daily level. It's a previous swing high that we've actually been failing for quite some time. So it's basically what we would say would be like the 700 to like 697.50 range. So what happened here, guys, was we got a really, really, really notable weak Tuesday, followed by what we would say would be like a relatively weak Wednesday. And then this was kind of just gapping up with the general market. However, I didn't really like the look of this and how it was kind of pushing its way higher back through this whole sell side move back into this daily level on almost like nothing that looks too strong. You go into the hourly and it looks like everything's starting to stall from the tops. I thought this could be some sort of like breakout failure type of trade, but I'm not entirely too sure yet. I still have some of this too. But I would more and less like to see like this start failing on some serious volume. But I should have been short QQQ. It is what it is. It's not the biggest deal in the world. I was also planning to short with Tesla, but at the same time, didn't really want to. I just saw like how the tape was really dying out, and then we kind of had this like strong order coming in off of like taking low to high. It's right off the golden pocket. Um, and it just looked really, really, really nice for this thing to start moving into the gap down here because we didn't actually establish a whole entire gap fill on Wednesday. And then this is relatively weak, right? It's gapping up with the general market, except it kind of got hit with like some heavy volume and a failure right off the tops. Um, and then it was just looking like it could be some sort of intraday lower high. So I was actually going to take a short there on Tesla, but I didn't. So yeah, that's a little unfortunate there because that one actually sold off pretty hard. But those were the trades. I've been preparing for QQQ to be pulling back here for a while, guys. Um, like I said, I mean, I've been calling the pullback since this Tuesday, the 20th, August 20th, right over here. And that's what we've been getting, right? But it's been you have to have a lot of patience with this kind of stuff, and it doesn't come easy. And you have to kind of execute properly and very precisely within this given range, given the fact that it's not breaking down with ease, right? So